Good afternoon, everybody. Today we have a man who needs no introduction. He is Mr. Nithin Kamath, CEO and founder Zerodha. Welcome to Businessworld, sir.
Thanks, Urvi. Please call me Nithin.
We have all been privy to the latest articles that have been floating in the market about Zerodha, but coming back to the basics, when we talk about the business model of Zerodha, why is it bootstrapped from the very outset and you haven't taken on any investors on the platform?
Right. Yeah, no, when we started the business in 2010, that was not really an option. So we were forced to bootstrap of sorts because firstly, 2010 was, like probably the worst time for stockbrokers historically after the financial crisis. So yeah, money wasn't really available. And by the time and also Indian VC ecosystem really came into play only, I think, around 2012, 2013. So around 2012-13, when we had started our business and we were kind of doing okay, VCs approached us, right? But then by then the business was already in the green. We were kind of profitable, and right from day one as a business, we haven't spent on acquiring customers, right? As in, today the biggest cost for most startups is really the cost of acquisition of a customer, right? And typically in businesses like ours, the revenue generated is not ever equal to the cost of acquisition if you go spend 2,500-3,000 rupees, right? And which is what a lot of our competition does. And because we didn't have to spend money on acquiring customers, we never really required large amounts of capital to grow the business. So our real cost as a business is really the cost of the team and our infra. And our tech team has done an amazing job. So the infra costs are also quite low. We are completely open source in-house, so there's no cost of there's no vendor dependencies, there's no enterprise product at all at the business. So that way we didn't have to raise money. And while it is very tempting to to go out and value yourself at whatever X and raise large amounts of money, but personally I believe that money brings an obligation on the table, and not something that I personally enjoy. And also today the way we are thinking is one of the reasons why Zerodha can produce amazing products is because we keep customer first in mind. And it's very tough to keep customer first when you have an obligation to grow revenues or grow profits fast, and which comes if you go and raise capital from outside. So I've said this in the past, in a business you need to have some kind of an edge to win or stay ahead of the competition. And today for us, the edge is that we're bootstrapped, as in we can do what is right for the customer before even doing something what is right for the business. So that essentially helps us stay apart from the competition in this.
Yes, most successful businesses historically have been self-funded, and that's how we have been doing businesses in India. And VC and angel investing is a fairly recent phenomenon if you look at the entire history of businesses. So I completely agree with your point that bootstrapping is the way to go to build a successful business.
No, not really. I'll just put a disclaimer. I don't think every business can be built bootstrapped. Right? As in, I think, this cut copy paste doesn't work. Just because we didn't raise money, it doesn't mean that a guy who's trying to build a e-commerce platform can do it without raising money, right? It isn't. Like certain businesses need capital to grow and certain businesses don't need capital to grow, right? We are lucky that we are one of those businesses which doesn't need a lot of capital to grow the business, right? So that way, we can actually come in. So you have to look at these things in context, so every business is different, so.
Yes, different strokes for different folks, as they say. So when we talk about Zerodha ahead, why did you come up with the idea of discount brokerage? In fact, how did this idea come about, and what made you see the potential in the market of this particular form of brokerage?
Yeah. No, see, the thing is, today Zerodha has turned out into something else, right? As in, when we started the business, the idea was to build something else. And I used to be a very active day trader and futures and options trader. And so when we started Zerodha, the thing was that we wanted to build a trading platform for a small bunch of very active traders. In our best case estimate, we thought we'll get to some 10,000 customers. We never thought we'll be at 6 million customers ever, So this whole potential, etc. I mean, today in hindsight, it seems like a great story. But on that day, we weren't really looking at building a really large business. We were actually looking at building Zerodha almost like a boutique business of sorts. And I think what is discount broking? See, the thing is, uh, this flat fee per trade, right, which is what we started in 2010. There's nothing unique about it because the US, this whole flat fee per trade was prevalent from the early 90s. I mean, the Charles Schwab, Z-Trade of the world. It's just that India had not taken on to a flat fee per trade format, right? And we were the first ones to come and question, saying, why isn't India a flat fee per trade? Because in the business of trading, the cost of execution of a trade doesn't go up with the size of the trade, which means you buy for 1 lakh rupees or you buy for 10 lakh rupees. I, as a broker, I'm not putting more effort because you're buying for 10 lakhs, right? As in, it's the same effort that we are putting from our side, be it a 1 lakh rupee trade or be it a 10 lakh rupee trade. So we said, if the effort is the same, maybe the pricing should be the same as well, right? I mean, that's the genesis of this whole flat fee per trade kind of pricing model. And yeah, so I mean, I don't know why others hadn't thought about it, but we were just lucky to be one of the first few guys to think about it.
Like when we talk about 6 million customers, a large number of them are startups, I like to believe. So Zerodha already had the Kite Initiative in place. Then why did you create a Rain Matter initiative, which is focused on startups again, and how are the two different?
Right. Yeah. No, I mean, out of the 6 million customer, most of our customers are less than 35 years of age, right? And this audience typically cares more about the product, right? Like my father doesn't really care too much about how the trading app looks and feels, right? I mean, he still wants to pick up a phone and call someone and place a buy or sell order, right? So the younger generation cares about the product a lot more than the older generation. So with Kite, we've done if you have a intent to buy or sell a stock, I think Kite, I have a vested interest in saying it, but Kite is probably the best product in the country. I mean, if you know what to buy or sell, right? But if you don't know what to buy or sell, which is a large part of the audience, you need some help, right? As in terms of discovery, etc. So in 2015, the question we asked ourselves is that, do we want to go attempt building all of these ideas ourselves, or do we go partner startups and help them do it with us, right? And we took the collaboration route because we thought it's a lot more powerful. So we were like maybe one of the first brokers across the world to offer this suite of APIs called Kite Connect APIs, which allowed for startups to come build on top of us. Like, for today, for example, there are so many of these neobanks, right? Neobanks for building on top of old generation banks, right? As in, so these startups are essentially like that, right? They're building on top of us. Now, why do it? Because one, we wanted to expand the markets, right? As in, that was always the goal of the business, saying, by 2015-16, we realized that we are becoming a big fish in a small pond. So we need to find a way to expand the markets. And each of these startups were building something niche, like the bet was, can we create a WhatsApp, Uber kind of moment for capital markets in the country? And the problem for startups was more than the money. I mean, today there are a lot of people who can fund startups, but I think more than the money, in the business of money, getting credibility takes a lot of time, right? So for example, if you're a startup and you're building a product, getting your first 10,000 customers who can trust you with their money is very tough, right? And as Zerodha, what we did was we put our head on the table and said, we trust this product. Why don't you use it and tell us what you think about it, right? So we helped a lot of these startups to quickly validate their product and scale up so they can become profitable, sustainable, etc. So today the Rain Matter, the initiative, has almost 20 startups. I think 12 of them are directly working on the capital market space, right? Solving for things like, like small cases, helping people invest into ideas. There is Ticker Tape, which is a stock discovery platform. There is Sensible, an options trading platform. Streak, which is a backtesting platform for non-programmers. Quico, which is helping people file their income tax returns when they're trading the markets. There is FinShots, which is building great content for first timers. So yeah, so I mean, they're all addressing like different parts of the problem. And when I look at this portfolio of startups, I'm super proud that we played some part in making sure all of these businesses exist in this country.
Yes, India is indeed the startup hotbed now, especially in the last 1 year. The tech-based startups are really catching up. I would like to question on the point that when we talk about money and investment, people are usually hesitant. They need a lot of trust. They need a lot of convincing. In that light, why has Zerodha never invested in marketing when they can get customers on board a lot more easily?
Yeah. No. So the thing is, this whole business of trading and investing, right? It's a very word of mouth enabled kind of a business, right? As in, I started trading because my friend introduced me to trading. I didn't start trading because I looked at a newspaper ad which said trade the markets, right? I mean, and if you look at 100 people around you, almost 95 of them will tell the reason for them to invest is because their friends or family, someone traded or invested, and they, they referred the product to them, right? So, I mean, that's the first reason. I mean, the first reason is that in this business to grow, you need that word of mouth growing for you. Like, I mean, that's really the only way to build sustainable business, right? You want your customers to go out and actually, to be very honest, I think not just in broking, in any business that you do, right? You want your customers to be your marketing force almost, right? Now, the second thing about marketing and advertisement is that SEBI, the regulators, don't allow any greed to be sold on your advertisement, right? We can't advertise saying you can make so much money in the next 1 year, right? I mean, greed is not allowed to be sold, right? You can only go advertise saying we offer the best platform, right? Now, the problem is every broker who puts an ad out there, he says he's got the best platform and lowest cost, right? So there is no differentiator when you see an advertisement campaign, right? I mean, everything almost is very similar in terms of product and initiatives. 3 is, I told you, right, the cost of acquisition of a customer, right? If you start marketing and advertising, I think today for a lot of our competitors, the cost is between 2,500 to 4,000 rupees to acquire an active customer, right? And at that cost, at the pricing that we have, at the brokerage, whatever we charge, you can never make money from your customer base, right? Now, if you can't, if you spend more than what you can earn, you're going to lose money, right, as a business, which means you have to, I mean, it's the most basic rule of a business, right? As in, you need to earn more than what you spend to acquire a customer, right? It never made sense, it never made sense for us to go and, like, personally, it didn't make sense, but, today's business is not about making profits, right? It's also about growth, right? As long as you can show growth, there'll be people who will come value more than what they valued you 1 year back, etc. Right? So different businesses take different routes to grow. I mean, we have taken the profitability route, saying that this profit, because this is not like a stopgap thing for us, right? I mean, we are looking at doing this for a long period of time, and we want to be sustainable and resilient to any kind of volatility in the market. So, and focusing on profitability over vanity helps, in that sense.
That's a nice slogan, profitability over vanity. I'm going to use that somewhere. So when we talk about Zerodha and other contemporaries, like say Robinhood in the US, which is valued at $40 billion presently, why is Zerodha not expanding and sticking to the 2 billion valuation that has come domestically? Has marketing got any role to play in that?
Yeah. No, I mean, firstly, this $2 billion valuation is what we have valued ourselves, right? I mean, if we go out and raise money out there, I think we will get valued at a lot more than 2 billion, because right now is a bull market. We're probably at the top of a bull market, and right now is like an awesome time for a broking business to be getting valued themselves, right? So, but what we have told internally with the team, who hold stock options, for whom we are valuing this at 2 billion. And buying back the stock options, is that we are issuing new stock options while we are buying back. So new people who get new options also get it at conservative valuations. And the idea of being conservative is because then you can show growth to everyone, right? I mean, even people who will get stock options this year, you can potentially show them growth over the next 2-3 years in their stock option value of sorts. So I mean, 2 billion is conservative, but I think it's fair, because the way we have valued ourselves at 2 billion is that we've given a 15 times multiple to our profits. Back in the day, that's how people were valuing businesses. I mean, it's changed today, but why 15 times? Because I believe that the size at which we are right now, growing from here will be a little trickier. I don't think we'll be able to grow at the speed which we have grown in the past. So we'll probably grow at 15, 20, 30% a year. So that's why a little conservative valuation. Now, can we go and build a Zerodha in the US and be a competitor to Robinhood? While the trading front end looks very similar, you look at Kite and you look at Robinhood's app, I mean, they might look very similar in the way, the functionality, etc. But the underlying infra is absolutely different. I mean, what powers Robinhood is very different to what powers Kite. So you can't just take this from here and take it there, right? As in, also about business, right? This whole right place, right time is a very crucial thing, right? As in, I mean, just because we have a product today doesn't mean we can go there and build another competing business to Robinhood. Robinhood was at the right place, right time in the US. We were at the right place, right time in India, right? As in when all of this was happening. So, businesses just can't be, like if everyone who had money could just build business, I mean, Google would own everything, Reliance would own everything, Amazon would own everything, right? There would be no other business at all, right? So it doesn't work, I mean, it isn't as easy as just taking a business and replicating in another market, especially in a regulated kind of a market.
Do we have any improvisation of Zerodha and its desire to expand internationally anytime in the future?
No, I mean, I spent some time personally, I mean, I spent some time in the US, and we said, because if there's any place you want to expand, it's US, right? I mean, it's like the mother of all markets. If you get it right in the US, the outcome can be, much bigger than any other country. But like I said, there was very quick learning saying that we can't just cut, copy, paste what's built in India and, use it in the US. And then we were like, India is really where the opportunity is, right? As in, India is probably one of the last few countries in the world where there's still growth, right? Where GDP is growing at whatever pace we are growing at. And there's a large population which doesn't invest in the markets. And it's also, if we can help India in some form in its economic growth, I mean, we'll feel a lot more excited than helping some other random country, right? So we said, even if there's opportunity, we're going to focus on India itself. So no, there's no international looking at other markets kind of thing. I mean, we are one of the projects which is on our table, which hasn't taken off yet, is allowing Indians to be able to invest into international stocks, right? And there, the issue has been more about remittance and making it less expensive to remit money outside India. As and when we solve for it, I think we will have a product for our customers.
Yes, remittance is a substantial amount of money that we attract back, especially down in the south. So coming back to the valuation that startups are placing on themselves, like Zerodha valued itself at $2 billion. Recently, we have seen a frenzy of startups evaluating themselves and raising money right before their IPO, and there is a kind of IPO frenzy going on out there. However, some people believe that the ground realities are divorced from what we hear and read in the news. What do you have to say about that?
Yeah, no, I mean, see, firstly, I'm super excited that these companies are IPOing because, in India, we've always had a problem that we never got to invest into products that we consume. Like, for example, there is nothing that trades on Indian markets that I personally consume. I mean, of course, I have a bank account which is listed on exchange, but I mean, it's not a brand I aspire to own, right? As in, maybe my toothpaste is listed on the exchange, right? But apart from that, there's nothing else which is, right? As in, so having folks like Zomato, Policy Bazaar, I mean, all of these folks that, we as millennials have consumed is quite exciting because and my personal belief is also that, this will help us expand the markets. I think a lot of millennials who aren't investing in the markets, they might come to the markets because of that. On the flip side, in terms of valuations, is it stretched? See, the thing is, new age companies that invest, where there are VCs and PEs, right? I mean, their valuation is not a it can't be looked traditionally, which is as a multiple of price of earnings. And because in India, most of us have been taught that the way to value a business is look at the price to earning multiple, right? As in here, there is no earning at all. So, there is, whatever logic you put, it will seem overvalued, right? I think the way to value new age businesses is based on growth, right? How fast are they growing? And can they continue growing at that sustained pace, right? As in, that's how they will demand, for, valuing them. Now, my only concern here is that a lot of these startups, including us, for example, as a CEO of Zerodha, right? I think one of the edges, big edge we have on our competition, which is bank-based brokers, is that we are very nimble in the way we operate. Right? By being private, we can take more risks. We can maneuver much easily. We can pivot between products. We can do all of that. But if you're a listed business, all of these nimbleness suddenly goes away, right? As in, now you become a much slower animal than you were before, right? And my concern here is that, which is, a lot of these IPOs which are valued based on growth, if because of being a listed company, their flexibility, maneuverability, risk-taking ability reduces, will the growth sustain, right? Potentially the growth can fall down, right? If growth drops, these valuations for these companies can drop significantly on the markets, right? And we've seen it in the US, right? As in every time, any of these, high growth startups, tech startups, if even if one quarter they are not come and shown the growth, the valuations just come down really, really fast, right? So yes, that's really my concern with these startups. I don't think, like I said, I don't think you can really value them just based on price to earnings. I think you have to value them based on growth. And if you're valuing them based on growth, maybe there is, you can come up with a reason why they're valued as much.
Yes, valuation has changed from absolute numbers to combined annual growth rate, as we call it in technical terms. But when we talk about how valuation has changed, at the same time, how people invest has also changed a lot, especially in the last 1 year. So as somebody who has been there, done that, you've been there for about a decade now in the market, how has investment in the last 1 year been different from the 9 years before that?
Right. Yeah, no, I've been in the markets for like 20 plus years now, so I don't think there has been any drastic change in the way people invest in the last, maybe one thing, right? Today, I think people get influenced more by social media influencers than by news media, right? As in, there is probably someone listening to some YouTube video and getting influenced versus reading a newspaper and getting influenced, so which I don't know if it's for good or for bad, but that has happened quite a bit, and that's also been the reason for the markets to expand fast, because these influencers make it seem very easy to make money in the markets, right? And that's that attracts more people to the stock markets. Apart from that, I think not last year, before 2016, 17, right? Opening a trading and demat account was a 40-page document, and like 30 signatures or 40 signatures and all of that, right? As in today, it's completely online, digital. So opening a trading account is very simple, right? So I think for us as a business, that has been one of the biggest tipping points in our journey, right? As in when you could open a customer's account online, we were able to kind of grow the business much faster. And one of the reasons why I think we've added as an industry, we've added as many accounts as we have added in the last 1 year, so. But apart from that, I don't think, India still isn't really big on stuff like Reddit, or, there is a small community on Twitter which talks about the market, but there isn't, it's like, in the US, there's been a drastic shift, right? As in like the activity on forums like Reddit is just spectacular, and mind-boggling. So India is yet to see that much. So.
Yeah, Reddit has different threads for different topics. One of them is being the stock market. So coming back to the markets in India, what do you think is going to be the state, say 5 years down the line of investment and markets in general, and what will be Zerodha's role in it?
Yeah. No, the thing is, it's very tough to call these things. I wouldn't know if you say, what will market close at 3:30 p.m. Today. I would not know the answer. So but my guess is that a lot of folks are coming to the markets because they're, the returns from other asset classes has reduced significantly, right? I mean, your money in the bank or appreciation in terms of real estate or gold. I mean, all of these have kind of plateaued, which is what is attracting people to the stock markets. And but I think stock markets, as I think most people realize very soon, is not an easy place to make money, right? As in, it's one of the toughest places in the world to make easy money. And so personally, I think there will be this huge transition to an advisory first market, because whenever people realize that they on their own can't make money, they will probably seek out for help, right? And today India doesn't have the whole concept of advisory first, right? As in, there is no, like the way you meet a doctor before taking medicines, you are not meeting a advisor before deciding what to do with the money, right? I think that transition will happen where like people will say, what, if I don't ask this financial doctor, I might end up making mistakes and lose money, right? So let me ask this doctor, right? As in, and I think that learning will happen after people losing some money. So my gut says that we'll probably have a bear market before a bull market, and that bear market will teach people why they need a financial doctor.
Yes, life is the best teacher, as they say, and investing with money and parting with your money has to be one of the toughest teachers, I believe. So when we invest in the stock market, we'll come to see in the upcoming 5 to 10 years. So before we let you go for the day, I would like to ask you, what would you like to say, or what would your advice be to people who are, say, wanting to start their own platform or wanting to enter the brokerage space themselves?
Or like a business?
Business, otherwise, the kind of issues they might face and what they should sail through.
Yeah, no, I mean, if someone is looking at coming to the markets to trade, invest, etc., I think, and if you're starting with zero, I think what you need to do is, whatever you think you want to trade, invest with, take only 5% of that money and trade, invest. Because like I said earlier, trading and investing and making money in the market is a very tough task. So when you're still very early in your career and you don't know the kind of mistakes you can make, I think that you should take as little risk as possible. Now, for startups building, for businesses who are trying to build and capture some of these potential growth in India, I don't think there's a use case for another broker in this country who's going to build another trading platform. I think there are one too many. If you're going to build another platform which has a buy sell button, a chart, and all of that, right? I don't think there is. We already do it at 0 rupees, or very little brokerage cost. So there is no advantage even that you can have in terms of reducing trading costs, right? So I think the opportunity, like I said earlier, right? I think one is, is around, there's this huge opportunity of building an advisory ecosystem, right? A lot of people have come to the markets and a lot of these people need help, right? So there is an opportunity to build like this help ecosystem, like the advisory ecosystem for the people who have come to the markets, or there's an opportunity that I don't know about already, like how some of the Rain Matter startups are kind of solving different new ways of helping customers. Maybe there is a niche trading platform that can help us expand the markets that that will probably potentially work as well, right? But the challenge in this business is that, like I said earlier, the business of money, credibility takes a long time. People will not part with their money on, especially if it is meant for saving and investing on an unknown platform. It'll at least take 3-4 years before people start trusting. Once in a while, one brand will get lucky and get there faster, right? But majority of the times, it's a grind. You have to do it for a while before people trust you with their money, and you just need to be, you just need to give yourself that much time.
Right, that's fair enough. So with that positive note, I would like to take your leave for the day. Thank you so much, Nithin, for joining us at Businessworld. It was really insightful and quite a pleasure talking to you.
Thanks, Urvi.